Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, it's Steve and Joe from Fresh Agenda, Everag, Global Insights, and we're here in HQ in Chicago. Very special to be here with the wider Everag Insights team. So today we've got a bit of a run through of this week's pulse, a bit of a snapshot of New Zealand trade, some interesting stats Steve's pulled out there, a bit of a wrap-up of ADPI, and then, of course, chart of the week. So let's kick into it, Steve. So firstly, Pulse results down again, down $25 a tonne for whole milk powder in this week's Pulse. So this is the second consecutive week of the Pulse event, continuing that downward trend, Steve.
And that's something we'll talk about, Joe, just how this trend appears. Skim milk powder, following on from that, went down even worse. It was down $50, and same loss in the prior Pulse event. But look, I dug out some stats, and one of our colleagues pointed this out. I did a little bit of digging on proving the hypothesis that Pulse results tend to be more down than up. And this is quite weird. Both whole milk powder and skim milk powder, the downs are 71%, exactly the same stat.
Yeah.
What I've separated here, though, where a Pulse follows an auction, right, not two Pulse events. So exactly the same stat, but that depends which way the trend is going. So I also dug into that. And for whole milk powder, we've got more of a history. And so what it shows is that 60% of the time, the Pulse results have been against trend.
So it's sort of like the turning point, Steve, in some of these runs for whole milk.
Yeah. In some cases, the auction that followed the Pulse went up again. Right, so the Pulse went down on its own, an isolated instance, and that occurred quite a lot. So there's a tendency to, I think everyone has that gut feeling, but when you look at the trend in each case, it does tend to buck the trend that's already been set in the lead up. So I just thought that was interesting.
Yeah, sure. New Zealand exports is the next thing we wanted to cover, and this data came out last week. I think we were in the air when it landed, basically, so we didn't get to cover it last week. But New Zealand whole milk powder exports up again, 21% in March, Steve, and they've been up 23% for the last 6 months. And taking into account that the first part of that 12-month period was a lot lower, that's 16% up for the year. Skim milk powder up 3%. 12% in the last 6 months, so that slowed a little bit, I guess, in that latest month of data. Fat's not up nearly as much, Steve, just 2.3%.
Yeah, that's gone a little slower lately.
Some of those prices probably crimping demand there.
Could have a bit to do with it. And when you look at total trade, Joe, that the total trade in milk solids equivalent, our favourite measure, was up 8.2%. The last 16 months, we talked about this a few videos ago, where there's been a real clearance, and so the volume of trade has certainly exceeded the volume of milk product available. So in the last 6 months, trade has been up 16%, and we've really now gone past that surge, that total trade reached in 21 when China bought so much powder. So we've gone past that in total volume. So it's quite an effort, really. But to look at this properly, you've got to go back and look at what's actually happened in total terms against milk availability. So here, something we haven't compared before in this forum, but the commodities that we track, and it's not just skim whole milk powder fats. We obviously cheese, the whey complex, the milk proteins, the fat-filled milk products, we add up all the solids associated with that, the dairy solids in those. And to show that, 86% of milk solids, the trade represented 86% of milk solids produced. So we've lagged the trade in that sense. So we get a proper equation or comparison. A year ago, that was only 78%. And the 3-year average before that was 80%. So the commodity portion of manufacturing, or essentially the milk use, appears to be rising. What does that say, Joe? What do you think?
Well, I guess it's not terribly pleasing, perhaps, for the wider New Zealand strategy, but I guess, a few of those more specialised producers struggling in recent time. But it's going to be an interesting one to watch, Steve, because I guess that's not really where New Zealand wants to go. Having picked out on milk, the strategy for most of the players there is more value add.
Yeah. So, that is. It may mean that other players are getting better at these, or they're getting greater penetration, but, that's an interesting stat to compare. Something to watch. That's right. Joe, how do you want to start this one? Because this is probably the highlight of this video. We've been here for a week now for ADPI and one of the pinnacle events in the dairy calendar globally. So the take, what's been, the things that have been picked up in our conversations and those of our colleagues.
Yeah, and it has been great to be part of the wider Everegg team and get everybody's view from the many, many meetings that have been occurring in the last couple of days. But there's been a general agreement, I guess, of the bearish outlook. That's not a surprise. Certainly weaker on ingredients. Butter in the US continues to do its own thing, but really most people are very comfortable there's not going to be a blowout in supply or any big surprises in supply. So I guess attention is really on demand. What we've seen in the last few months that we've been talking about, is it filling pipelines or is it real demand is really the big question, isn't it, Steve?
Yeah, I think it's right. I mean, around the different products, there's different issues being discussed. I mean, WPC80 and WPI has got a lot of attention.
Yeah.
And seems to have peaked. That's pretty clear from conversations. The whey market's on a bit of a downtrend. And look, that's often discussed, and we had this issue discussed a lot in Dubai when we were there for that big event as well, that, these cheese plants coming online, we're getting two sets of views.
Yes. Either it's can they possibly get the milk to fill these plants, because we've still got this issue of negative trends in milk and not enough cows, or the other one is, will they flood the market or at least temporarily depress the cheese market when these factories come on? And I guess the other thing we've heard is, a lot of these factories are probably going to be delayed into first quarter 2025. But, yeah, they're the two almost diametrically opposed views, aren't they, Steve, about these cheese plants?
Like, we can't leave this without talking about bird flu.
Sure.
HPAI.
Highly pathogenic avian influenza.
Correct. Small production effects, I guess the consensus is.
At least to date, yeah.
At least to date. And on the other side, downstream in the supply chain, it seems media has mostly done a good job. There's been no demand pushback evident at this point.
Yeah.
Watch this space, but that's, generally people are more relaxed than they would have been a week before or 2 weeks before.
Yeah, they've had some really encouraging testing done on products. They've found the virus fragments in some retail products, but also been able to test to show that they're not active. So, again, it's another watch this space, but at the moment it hasn't been too bad. The other observation from some of our colleagues is there's a lot of Kiwis here all over town. So, maybe that's a sign that the opportunities in China aren't looking so great, which wouldn't be a surprise to anyone, but a lot more interest in other markets, Steve, from some of our Kiwi friends.
That's right. I also put it down the fact that I think Chicago weather's been better than it has been in New Zealand in the last week, certainly.
Beautiful.
Got better as we've stayed on, so that could be it.
It could be.
Let's wrap this up with Chart of the Week, Joe.
Yeah, and staying in the US, Steve, March butter stock data came out just a couple of days ago. Butter stocks were up 2.3%, a little bit higher than was expected, so it's bearish for the market, you would think. Prices are still pretty high, though. Production's been up for the last 3 months by about 5%, though, Steve. So, those increased stocks aren't a real red flag for demand, which, depending on who you talk to, is still quite good despite where prices are sitting, although we are hearing some talk about some substitution in some instances. So
here we are.
Again, butter doing its own thing in the US. We'll keep watching that, of course.
Yeah, so the market has this thing about how does ADPI affect events, affect markets.
Yes.
And we poured back through the data to not find very much.
Yeah.
But in the case of butter, the market moved up anyway.
Sure.
And again, a lot of theories around this issue of product form being the real driver here, and we're seeing something that, there's not much uncommitted bulk butter lying around and less fat's ending up in that product form. So it's kind of an artificial market in that respect.
Yeah.
Well, good way to finish. That's all from us. Thanks for watching. We'll be back next week.